what do you think that this means for, prices and rentals and things like that?
I still think the same thing. And of course, this all is completely dependent on the market, the area, the submarket, and all that kind of stuff. So you can't argue the fact that homes used to be about $300,000 nationally in 2019. Mm-hmm. And now in 2025, actually early 26, they're $400,000. So they've gone up $100,000 in 5 to 6 years. Now there's all kinds of reasons, but why would that happen? I mean, seriously, we had a pandemic during that, right? Like, how could you have a pandemic where everybody was sent home and you have $100,000 price run, right? Like that's exactly what happened. That's the math, and you can't argue with that. So the reason is that we have a supply shortage. That's the reason. And of course, we had interest rates go down a lot during that period of time, which pushed the prices up. So the pandemic. Think about that. Like, who was building during the pandemic? Right?
Yeah.
Who was buying? Who was renting? Right? All that stuff stopped. Yet we got this big price run. Why is that? Well, what happened was we lowered interest rates. If you
big
remember.
Time.
Yeah, big time. Okay, so policy drove, the prices up. That's what happened. So, and the reason is, and then when they ran out of product. The supply wasn't big enough. So this also happened in the GFC in 2008. There was 4 million homes on the market during that time. Right now there's 1 million. Okay, just to put it in perspective, we're not even close. At that time, they were all bank owned, and there's a lot of inventory, and people were just going crazy. But once again, how do you move all that inventory? It's like anything. It's like. Like when last year's product or even last year's car, let's call it 2025 models, are being priced less than 2026. It's the same thing. So it's just when you have too much of something, you price it accordingly, and that's what's happening right now. So I still believe that we're severely undersupplied. And there's only two things that will actually get a homeowner into a home. One is to make the monthly affordable, and two is to lower prices. And lower prices are coming without a lot of new supply. That's the only way that prices will come down, because they're not going to come down. Labor costs are not going to come down. Construction costs are not going to come down. Maybe, yes, you'll have some interest rates come down. That could help a little bit, but trust me, a home builder, is not going to say, "Oh, our interest costs are lower, so we're gonna pass that on to the consumer." That's not going to happen. So, so these prices are set. I don't think we're going to see any relief anytime soon.
Well, the other thing that's interesting is that, if they pull back on building, which they will if they're not making any money, then
why would you? Why would anyone build if there's no profit?
And that's going to hurt the supply even more.
Right, and it already has, right? We've already seen this already. The people that owned land when rates went up in the last couple of years pulled back already, and so what we're seeing right now is the lag effect. So all the apartments that when you're seeing this rent relief, and we're flipping over to multifamily, of course, and a little bit of commercial, apartment building takes 18 months to build. That's not the same for a single family home, right? But the first time it takes us over a year to even open a clubhouse. Like you're actually on 10 to 20 acres, let's say. There's a time frame with that, and you're actually not leasing really until midway into the second year, and you're not really even leasing and stabilizing until year 3 or 4, perhaps, depending on the size. Very different for single family, where you can enter the market quickly, right? And you can build a house relatively fast, and depending on a number of factors. And so all that pulled back, though. The cost of capital, even for me and Ross, we pulled back. We're like, we have a bunch of land, but we're gonna not build on it right now because it's 8 or 9% construction for construction debt, where it's 3 or 4% higher than it was even just right during the pandemic or right before the pandemic. So that adds a lot, especially on a big multifamily project where the construction costs are 60, 70, 80, even $100 million. 2, 3, 4% is a lot.